So a big thing in profitable trading is understanding the market environment that your strategy works best in. What's up guys, Austin here, 7-figure entrepreneur and day trader. I've been day trading over half a decade, own multiple businesses in the trading space, and this is what I have to share with you to make your journey just a little bit easier. I personally know that my strategy does not work well in range-bound or choppy markets. It also doesn't work well in times of earnings. So I personally lower my expectations whenever there is earnings coming out, especially tech earnings, because I am a NASDAQ futures trader. I focus primarily on the NQ. I'll glance at the ES occasionally and trade that here and there, but my main bread and butter is the NQ. So whenever there's tech earnings, I'm way more tame, and I'm definitely dialing down my expectations on my trading activity and what I'm looking to extract from the markets. And I also understand that when markets are range bound or choppy, that is not an environment that is fruitful to the way that I trade. So not only that, whenever markets are trading inside the previous day's range, I'm also a lot more tame and my expectations are dialed down. So that's one of the things. You really need to know what type of environment your strategies that you trade work best in. You can gather this information by using online trading journals or even back testing manually with a spreadsheet on different situations and different environments that your market's performing. So for me, earnings, range bound, choppy, not my forte. My strategy works best in trending outside range environments, and that is the environment that really gets me excited and that I really look to double down and really hit hard. Markets can get choppy on periods of low volume, times whenever it's holidays, for example. So whenever there's holiday time, markets drop volume, but that also makes them thin, so they can become erratic, not necessarily just choppy. So whenever there's large periods of indecision, whether you're trading a stock, whether you're trading crypto, whether you're trading futures, whether you're trading Forex, whatever, if there's some type of catalyst that delivers a lot of uncertainty and is over a longer duration of time, it will deliver visual uncertainty on your charts by form of chop, range-bound environments. So those types of environments are not my thing at all. There are people that like to trade the outer bounds of ranges. I am not one of those people. So some strategies are conducive to trading, the outer bounds of ranges, whether you're going to be shorting the upper bound, the resistance of a range, or basically buying the support or the bottom of a range. Some people really enjoy those types of environments. Some people also really enjoy environments whenever there's, Federal Reserve speaker speeches. For me personally, I avoid those. There are certain types of strategies that are conducive to certain market environments, such as super high impact speeches or different types of technical market environments. Personally, I avoid speeches, I avoid unpredictable catalysts, I avoid earnings, I avoid chop. I personally live for trending outside range market environments that are free of uncertain fundamental catalysts. So I personally avoid trading during Federal Reserve speeches or any type of speech or event that might deliver some uncertainty because of just that reason. It delivers an amount of uncertainty. So if I know that I'm trading in an environment that is not organic, as if anything is organic in these markets, but something that's out of the norm, something that may impact the typical behavior or direction of a market, I'm looking to step back from that and trade in a market where I know it's healthier. Now, in the end of the day, all these markets are in their own regards, but that's not to say that there is not, normal days on the market that don't have any unprecedented catalysts that might make things get a little crazy. So for me, that's the market that I enjoy, markets that aren't being tampered with, whether it's by earnings reports, whether it's by speeches, whether it's by significant data releases. I always wait till things like that pass, and then I'll look to get involved afterwards, but I definitely am not interested in trading before them or especially during them. So a trending outside range is whenever a market, let's say a bear market, is heading down towards new lows, making a new leg lower, or when uptrending markets are breaking out and making a new leg higher. Those are the types of markets that I like to trade, markets that have momentum and markets that are very clearly and confidently heading towards a particular direction. So an example would be how earlier this year, the US decided to deplete its strategic oil reserves, and that sent crude oil downwards. So by depleting our strategic oil reserves and pumping more supply into the market, it basically is increasing supply and therefore decreasing value. Because whenever there's more supply of something, it's cheaper to acquire. So it was very clear that the market was moving lower. In that type of a market, it's very straightforward to look for short setups. The market was moving lower each day. It's very confident that you're trading in a market that is going to be more inclined to the downside. Now, on the other hand, after COVID, when we had the COVID pump, when the Fed was just pumping money into the markets, it was like stupidly easy to make money to the upside, because every single day the market would just go up. And you could look at any chart and look like right when COVID happened, the market just dips down and then rocket ships up. That was all the Fed just pumping the market. So if you're aware of, a quantitative easing, understanding that as that type of event happens, that it's going to propel markets, it's much easier to trade that in type of environment to the upside and look for those long setups and capitalize on those types of moves. So it's all about knowing the environment that you're trading, all about knowing what types of catalysts are happening that might provide certain types of narratives towards market behavior, and then capitalizing on those environments and understanding, most importantly, what type of strategy to use in those environments. I know my strategy is helpful in trending markets, capitalizing on trends continuing, whereas some strategies are better on fading trends or fading parabolic moves. It all just depends on what approach you're taking from a technical standpoint to come up with these informed decisions that have strategic probabilities in your favor. So I've been day trading for years. I've tried tons of strategies out there. The strategy that I trade now is something that I've been able to piece together over all my years of experience. For me, it is my preferred way to trade. If there's another style that works for you, that's great. I'm happy for you. Keep it going. If it's working, keep going. But if you're looking for something that does work, that is where I could definitely step in and help you out there if you're looking to capitalize on those trending environments. So if you like content like this and are looking forward to hearing more trading related videos or business related videos, make sure you tap that subscribe button, and I will keep content like this coming out on a regular basis.